well. So you've got two things going on. Interest rates are higher, which means qualifying for a mortgage is just logically more difficult. And you also have the banks kind of easing off the pedal a little bit.
I'm with Marc Elliott de Lama, owner of Fluent Finance Abroad, and I have some questions for you. Hello, Marc.
Good morning, Alfredo. Lovely to see you this Friday morning.
There's an article in one of the industry publications called Observatorio Inmobiliario, a Spanish one, quoting some stats and some information from a company called Finanzate.
Mm-hmm.
And the main angle of the story, or the headline of the story, is that 32% of mortgage applications in the first quarter of the year have been rejected. Is there a likely difference between the approval rate for non-residents and residents?
I think in general, the approval rates would be kind of similar. It all depends on how it's approached as to whether a mortgage gets approved or not. Obviously, with rates going up the way they have in the last 12 months, it's obvious that affordability is going to be an issue. It's pretty obvious that there's going to be less mortgages approved because the qualification criteria is harder. That's the first thing. I mean, that's logical. If the way we calculate the affordability is based on the monthly payment. So 2 years ago, we were calculating affordability on 1.5%, 2%. Okay, so the monthly payment was lower. That means more mortgages can be approved because the income levels you need to qualify for that lower monthly payment would make it easier to hit the criteria. And now we're doing basic calculations on 3-4%. So logically, simple maths tells you that it's going to be more difficult to get mortgages approved in a higher interest rate environment. I'd like to add to that because there's turbulence a little bit, not much, but a bit, the banks obviously will have to analyze the risk. And so if there's a bit of turbulence, and it all depends on what part of the world you're in or what part of Spain you're in as well, because different regions will be affected differently to other parts. So a bank will have to assess, okay, well, look, what's our lending appetite at the moment? And what we're seeing and what we're feeling, and this is natural. This happens. It happens all the time over the course of 20 or 30 years 20 years that I've been involved in this business. You will get waves of, yes, we're confident, we're not so confident. We're kind of holding back a little bit as well. So you've got two things going on. Interest rates are higher, which means qualifying for a mortgage is just logically more difficult. And you also have the banks kind of easing off the pedal a little bit. So yeah, it's a natural thing that we would see mortgage approvals lower.
So you don't see, other than maybe practicalities of proving affordability, you don't see any real difference between the ability for a Spanish person against a non-Spanish person to obtain a Spanish mortgage at the moment, other than the paperwork and the affordability?
No, it's it. It's just basic lending.
Okay.
It's just real basic lending at the end of the day. So interest rates have gone up to curb inflation, okay? And a big part of inflation is buying houses. So they want to cool that down a bit, okay? That makes sense. So I'll give you an example. You may be, 35 married couple in Jaén or Sevilla or Madrid, whatever. 2 years ago, you were looking at a house probably around about 350, 400,000. Well, today you're going to be looking at a house at 250,000.
Okay, because your affordability has dropped. So the amount that you can borrow has dropped.
Correct.
Let's go to the stat then. The 32% of mortgages applied for in the first quarter have been denied, which means that you're going to be a positive thinker. 68% were approved. But is that number more or less what you see yourselves at Fluent Finance?
I mean, that stat is for the whole of Spain. All right. So the non-resident market that we specialize in is a much smaller part of that. We still get the same level of inquiries. When we assess a client's ability to buy a house in Spain, we have to look at two things. One is their level of income, their expenditure and see how a Spanish monthly payment for a Spanish mortgage would fit into that. And also, B, we would need to assess how much cash they're willing to bring to the table. And these two things are fundamental when you're looking at a lending proposal. The more cash you bring, the easier lending gets. Okay. And that's where we, and I think when I try and explain the basics of what we do and money lending is a bit like, you're looking at scales. I'm a Libra, so I kind of get the scale thing. So on one hand, you've got the lender who has the money. On the other side, you have the borrower who wants the money. And you both sides have to put in order for the scales to balance. And when you find that equilibrium, that's when a mortgage happens. The marriage, if you want to call it that. But now the borrowers have to put more in order to balance those scales. We as a company, I mean, to be honest, we've been doing it for such a long time now. It's I think what we bring to the table for any particular client is that we will be able to show them how to get that balance in order for a mortgage application to be successful. Yeah, we have to give bad news at times. We have to give, so a client may come in and say, I want to buy this. And we're like, whoa, the scales are not in your favor. And then maybe we would have to say, instead of looking at this price, maybe you have to come down.
Right. So that's not the same as, at least in what I'm understanding, that's not the same as a rejection from the bank. Because what you're basically saying is you won't be applying for it on their behalf unless it's likely to succeed. Is that accurate?
Yeah. I mean, at the end of the day, we all have a dream of buying a house, right? There's no point going forward if you're going to fail. Because that's just a waste of time and energy and money for everyone. And it's quite risky as well. Obviously, if you're going to put down a 10% arras deposit, that's non-refundable. Okay, so you need to make sure that you know what you're doing before you actually go ahead and agree to buy a property. Because if you can't get the money at the end of the day, you've failed horribly and you've lost 10%.
Okay, gotcha. Which is going into the reasons that they're provided, their reasons that they're provided for the rejections. They're saying that the majority, 68%, is insufficient credit history, which kind of makes sense, doesn't it? I guess 31% insufficient income, which is kind of the one you were just saying. That's probably going up, I guess, if the threshold has been raised a little bit. 50% lack of stable employment. Maybe that would have an impact on the expat element, maybe. And 6% not enough savings in terms of covering the fees and so on, and 11%, quite a large amount when you think about it, missing documentation. Is anything amongst those that seem weird to you, or high or low, or is it just pretty much what you see?
If you're missing documentation, you really shouldn't be applying for a mortgage in the first place. I mean, that's just pointless. Lack of credit history. Okay, if you know that at the outset, you shouldn't even be applying for a mortgage. Wait until you have a credit history. I mean, it's basic stuff, man.
Okay.
Sorry, Alfredo, but yeah, the two other points is, do you have enough money and do you have enough income? That's pretty much it.
Okay.
Right. We don't. That no one really cares about anything else, really. You could be tall, fat, thin, whatever. As long as you've got enough money and enough income, yeah, we'll lend you money. Yeah, and the house is good. Obviously, the house is mortgageable. Right.
Okay. Well, thank you very much for your time, and have a great weekend, Marc.
And you. Thank you so much. Take care.
Thank you.
Say you, right? You say, right, I'm interested in buying a house. And I would spend a good, because I'm pretty quick. So, I mean, I should really spend.
That's what she said.